coming up today. Nigeria ranks higher in the World Bank Ease of Doing Business report. And Ghana loses $190 million US grant over cancelled power contract. Plus, world top cocoa growers withdraw threat to halt social programs. We'll get started with the markets. We'll begin here in Africa, where stocks are mostly higher at intraday, except for Nigeria. The NSE main share index was marginally down 0.03%. The JSE index in South Africa rose 0.15% at intraday. And Egypt, the market moved up some 0.67%, while the Kenyan bourse closed its trading day on Wednesday up by 0.09%. In the Middle East, all the major markets we track were in the green at intraday. The Abu Dhabi and Dubai indices jumped 0.22% and 0.14% each. And in Qatar, we saw the index up by 0.22%, while the Saudi exchange was up 0.11% at intraday. In Asia Pacific, shares mostly rose in the afternoon as latest figures showed that South Korea's economy continued to slow. Meanwhile, investors look ahead to the European Central Bank meeting today. Mainland Chinese markets moved to a subdued finish. The Shanghai Composite closed flat to 2,940.92, while the Shenzhen Composite declined 0.21% to 1,615.96. Hong Kong's Hang Seng Index bucked the trend, jumping 0.77% in its final hour of trade. Australia's ASX 200 rose 0.31% to close at 6,693.60. Japan's Nikkei 225 jumped 0.55%, while the Kospi in South Korea edged up 0.24%. To close at 2,085.966. And in Europe, stocks traded higher in early trade today as traders remain in limbo over an expected delay to the UK's departure from the European Union, while corporate earnings season gathers pace. Meanwhile, the European Central Bank is convening for its latest policy meeting today, marking a swan song for outgoing ECB President Mario Draghi. Let's bring in Chelsea now for details. Hello, Chelsea. Good afternoon. While the European Central Bank is wrapping up its latest meeting this afternoon, which will be the last for President Mario Draghi, what did the ECB decide, and what can we expect to hear during Draghi's final press conference?
Well, the ECB just announced its latest decision. They kept policy unchanged, which was pretty much what the market had expected. And the September meeting, the ECB restarted its bond buying program and cut interest rates. So that was a pretty big deal. There wasn't a lot expected for this meeting, but it is important because it's the last meeting, as you said, of Chairman and President Mario Draghi. And he's beginning his press conference now, and he's expected to sort of defend his policies over the past 8 years and that he's been at the helm here. And there's been a lot of controversy, especially after the last meeting, about the ECB restarting its quantitative easing program. And so he's sort of supposed to outline his logic there and just defend in general this easing that he's restarted as he's going out.
So what legacies would you say Mario Draghi has left, and what are the impacts on financial markets, particularly the equities?
Mario Draghi's legacy is going to simply be that he saved the euro. I think even his critics would agree that the euro and the European economy would be in a much different place if he hadn't, in 2012, come in and said, we're going to do whatever it takes to sort of revive the economy here. Whenever he took over in 2011, the EU was really at the brink of a crisis. There were a lot of concerns about the debt of European countries like Greece, and just generally a lot of questions over the future of the euro. And he sort of took monetary policy to the edge of what people thought was possible. Over the past 8 years, the ECB bought $2.6 trillion in bonds and brought interest rates into the negative territory. So those were really like unthinkable policies before that. So that's going to be a legacy for sure. In terms of the impact on markets, it's There's two different camps here. One would say that the ECB's policies have distorted markets and they've driven money into places they shouldn't. In doing this massive quantitative easing program, they definitely encouraged people to buy bonds, and they themselves, as I said, bought 2.6 trillion euros worth of bonds that drove up the prices of bonds. It also encouraged people to buy more stocks. So this is often cited as, excuse me, one of the key factors that's driven up stock prices, because if you can't make money off of bonds, you're gonna buy stocks. So this has definitely supported stocks. It's driven up bond prices. At the same time, it has been difficult for banks, and we've seen a lot of pressure on banks who can no longer make a lot of money lending. So that's definitely weighed on the banking sector as well.
So IMF Christine Lagarde is taking over from him. What will be the key issues and challenges for her?
Lagarde is going to have a difficult challenge. There's a lot of differing opinions right now within the ECB. In the last meeting, whenever they decided to restart quantitative easing, about a third of the governing board dissented on that decision. And there's been a lot of really vocal critics of the decision to sort of restart quantitative easing. So she's going to have to try and unite those voices. At the same time, she's definitely going to have this facing the same problem that Mario Draghi faced, of sort of compelling these other countries in the EU to be more open with fiscal spending. That's been a huge talking point for Draghi over the last several months, of countries like Greece or like Germany need to spend more money. And because we've sort of reached the bounds of what monetary policy can do. So Lagarde is going to have her work cut out for her and sort of encouraging fiscal spending. But I think at the same time, there are just these very big questions over what more can monetary policy do here, and bigger questions about inflation targets and things like that. So it's really going to be a difficult period for Lagarde, but it does seem that she's sort of continuing the policies that Draghi has implemented here. She seems sort of on board with the strategy. So it's going to be interesting to see how she unites all these voices.
We'll see. And of course, we'll keep our ears to what Draghi has to say today. Thank you, Chelsea. Well, Mario Draghi is ending his 8-year term at the European Central Bank at the end of the month. His decisions of late are set to have triggered a rare division within the central bank. Analysts have no doubt that Draghi will always be remembered for his whatever it takes speech. Well, Juliana will give us an update from the London markets. Hello, Juliana. Good afternoon. Mario Draghi is leading final ECB rate-setting meetings today. How interested are the markets, and how are they reacting to Draghi's final meetings today?
Well, slightly interested. I suppose, you can't have the most powerful figure in the Eurozone speaking without the markets reacting, of course, not just because this is his final curtain call, but because the Eurozone is stagnated at the moment. Its growth is at about 0.1%. And of course, its largest economy, Germany, is likely to be heading into recession. They just released their latest PMI data, and it shows that their labour market is struggling. So I think a lot of people will be focused on that. But of course, there are more pressing global issues, not just being Brexit, but of course, the spat between the US and China. But let's quickly have a look at those numbers specifically. The FTSE All-Share is up 0.80% at intraday. The FTSE 100 is up 0.95%, and the FTSE 250 is up at 0.16%. In currencies, sterling not doing great at the moment. The British pound is down on the US dollar by 0.18%, also down on the euro by 0.16%, and down on the Japanese yen by 0.21%.
Aside from the ECB press briefing today, Metro Bank issued third quarter results after trading in London had ended yesterday. How are investors reacting to those numbers the morning after?
Interesting, actually. They did report those severe losses. Those losses were about £3.9 million for the 9 months in this year. But surprisingly, their shares were up 5%. I think that's got something to do with Vernon Hill, their chief executive, resigning yesterday. He resigned before those figures were released, and he resigned with immediate effect. So he will still be a non-executive member of their board, but he won't have a front-facing position. So shareholders seem to be much happier with that. But if you look at the wider picture, over the past 12 months, Metro Bank have seen their shares plunge about 90%. So they're really struggling. And also as well, off the back of those poor figures released yesterday, a lot of city officials do feel that it will take at least a year if they are going to see profits return. And that's if they're going to see it, because their high street model is slowly failing. A lot of banks now are moving into the digital sector. Fintech companies are really challenging lots of the more traditional banks. And Metro Bank is a new bank. So they had the accountant blunder at the beginning of the year, which lost them almost £1 billion. And now they're showing more losses. So there are questions as to whether in a few years' time, Metro Bank will still be a key feature on British high streets.
And in another development, OVO's takeover of SSE business seems to be facing some scrutiny by UK's competition watchdog. What will this mean for the deal, which is expected to create UK's second largest energy supplier?
Well, at the moment, the deal's on hold. And as you said, the Competition and Markets Authority announced today that they will be looking at that £500 million takeover. OVO, they are the largest independent supplier of energy in the UK. And yes, they were looking to take over SSE's business retail suppliers. And they supply about 3.4 million homes. And that would have made OVO the second largest supplier in the UK, just underneath British Gas. British Gas, they have about 12 million customers. But, you know, there are questions surrounding whether or not they even have the capacity to be able to look after so many homes. The actual industry regulator on Tuesday said that they would be scrutinising a lot of independent suppliers more. Of course, this is Britain. You can't talk about Britain without talking about the weather. And particularly as we come into those colder months, they want to make sure that these gas suppliers in a really competitive market, before they make these deals, have the capacity. So the market authorities are asking for comments and suggestions and an overview about this £500 million takeover. So there are a couple of weeks to see whether or not OVO can actually complete this deal.
All right, Juliana, I guess it's all about Draghi today. So let's keep our eyes on Draghi and his team. Thank you and have a great day.
Thank you.
And in the U.S. stock index futures, we're edging slightly higher this morning on a bumper day for corporate earnings. At around 2:30 a.m. Eastern Time, Dow futures rose by just 1 point, indicating a slightly higher open. Futures on the S&P and Nasdaq were also hovering around the flat line. The market focus remains on the corporate sector as today marks the busiest day of the earnings season. Comcast, American Airlines and Twitter are among some of the major companies set to report before the opening bell. Amazon, Intel and Visa will be reporting their latest quarterly figures after the market close. On the data front, there will be jobless claims and durable goods at 8:30 a.m. Eastern Time. Manufacturing and services PMIs will be released at 9:45 a.m. Eastern Time. Away from the equities market, back here on the African continent, the United States has cancelled $190 million in grants to Ghana under the Power Africa initiative in response to the Ghanaian government's termination of a contract with a private utility provider. The Millennium Challenge Corporation, a U.S. government foreign assistance agency, agreed in 2014 to provide $498 million in funding to Ghana's power sector to help stimulate further private investment. The initiative, launched in 2013 by then-President Barack Obama and aiming to bring electricity to tens of millions of households in Africa, was the largest by the United States under Power Africa. One reform under the agreement involved handing over operations at state-run Electricity Company of Ghana in March to Ghana Power Distribution Services, a consortium led by Philippine electricity company Meralco. But Ghana's finance minister has informed U.S. officials that the government was cancelling the 20-year concession it had signed with PDS, saying payment guarantees provided were not satisfactory. In a statement on Tuesday, the U.S. Embassy said the decision to terminate the contract was unjustified and that the MSCC was therefore cancelling $190 million in grants. All right, we'll take a break now. When we come back, we'll look at what's happening on the domestic commodities market space. To stay with us.